The Newsday continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. PSA reports that inflation eased for the second straight month to 4.1% in November. This was much lower than the 4.9% clip seen in October and was within the 4 to 4.8% range forecast by the Bangko Sentral ng Pilipinas. This is also slightly slower than what analysts predicted in a Business World poll, which yielded a median estimate of 4.4% for November inflation. The central bank attributes this to lower prices of vegetables and fuel products in November, coupled with the strengthening of the peso. The BSP, however, said upward price pressures might come from price hikes in electricity, LPG, toll rates, and agricultural products. The increase in self-rated poor families is seen as a major challenge to the country's economic growth. Think tank GlobalSource Partners notes that the number of self-rated poor families, despite faster economic growth in the third quarter, citing the latest SWS survey. The said results showed 4.48% of Filipino families felt poor. That's equivalent to 13.2 million self-rated poor families, up from the 12.5 million recorded in June. The think tank says the increase may be due to sustained high inflation, particularly in food and transportation. Limited job opportunities could also explain the survey results. Because of this, GlobalSource recommends that the government should focus its programs to areas where poverty is most prevalent. Will the government be able to meet its growth and inflation targets this year? Let's ask that to China Bank's Chief Economist, Domini Velasquez. Good morning. Thank you for joining us.
Hello, good morning, Diego. Thank you also.
Okay, let's get right to it. Let's start with inflation first. That's 4.1% in November. Was this expected, and do you think the government will still be able to bring this down to at least 2 to 4% target range with just 1 month to go, and of course, taking holiday demand into account?
I think this was actually a little bit of a good surprise still, if you know the median estimate is 4.3%, but still within the range of the BSP. But I think more importantly, this is the second month that we saw a sharp deceleration in inflation, actually better than expected. Remember, inflation was 4.9% in October. So this trend is actually a good thing. Right now, we're seeing that there's a possibility that we can actually reach the 4% target for 1 month by December, because, prices are a little bit going down for vegetables, fish. However, rice prices is again on an uptrend after a slowdown in October. So that's a key risk.
Yes, and with just a few weeks to go till the end of the year, what would be then your projections for 2023? Do you think that the 6 to 7% is still achievable? Do you think holiday spending will be able to propel GDP to target?
Oh, okay. For GDP, I think, of course, there is that very slim chance, but just because, your GDP is actually a bit lower, especially in the second quarter, it will take a lot. In Q3, we were actually quite surprised also, and also a very pleasant surprise that the GDP hit above expectations, largely because government was spending already. So you remember they had this catch-up plan in the second quarter. They were actually able to actualize that in Q3. However, as we all know, government only has a limited budget. So some of these spending, they've actually spent in Q3 already. So they don't have that same fiscal push for Q4. We think for Q4 a little bit lower. Our full year GDP estimate is actually around 5.6%.
Okay, but do you think a rate hike is still possible this month? I mean, is this still necessary?
Okay, we're a bit dovish. We don't think a rate hike is necessary. Even the last rate hike, our call was actually no hikes anymore. But that's over and done. We don't think the BSP will hike anymore this month. We do think they'll continue to be quite hawkish because next year, even though prices have actually stabilized a little bit, there is a few months next year, I
Okay.
think for on our estimate March to July, that inflation will again breach the 4% target. That's
Okay.
purely due to base effects. So we think until first half, BSP will still continue to be hawkish. No more rate hikes, but they won't talk about rate cuts yet unless,
Okay.
something out of the ordinary happens.
Let's talk about, ma'am, about next year, 2024. Now, do you see our economic growth accelerating, at least for next year? And what are the risks to watch out for?
Okay, for 2024, still very moderate growth, not as bullish as the 6.5 to 8% of the government, but I think maybe a little bit better than this year. Interest rates will continue to be high next year. So that's the reason for this moderation in growth. Even outlook externally, the US will likely have slower growth than compared to this year. China has not yet, fully recovered from that pandemic restriction. So China's growth is still a little bit slower. And that actually is where we're coming from. So, for example, just this morning, I think maybe yesterday morning, the Electronics Federation actually released their forecast for semiconductors, and they think it's 0% growth exports for electronics next year. And that's the biggest export market of the export product of the Philippines. So still quite moderate in terms of outlook. However, we do think that there are some upside potential. We've done a lot of these structural reforms in terms of liberalizing some industries. So, you have renewable energy, you have your PSA Act, and we will slowly see the fruits of these structural reforms in the next 2, 3 years.
And you mentioned different areas like renewable energy. But what other areas of the economy do you think that the government should focus on or zero in 2024 for a significant improvement?
Okay, in terms of growth, I think already in line. They've picked up in terms of infrastructure spending. Next year's budget is actually higher than this year. So this year's budget was around 5% higher than 2022.
Okay.
Next year, it's going to be 9.5% higher. And much of it will be in infrastructure. So that's a good thing, I think. Even in rails, even in connectivity, they're actually focusing on that. I think one of the things, though, not so much near-term growth related, but I think needs to be focused on is, nutrition, early childhood development, which I think the Philippines has been lagging behind. It's been actually flagged by a lot of academicians that, we have to focus on the social aspect in terms of spending. We won't see the fruits of that spending in the next year, but we will see it in the medium term and long term.
Well, thank you once again for your insights and for joining us. Unfortunately, that's all the time we have for now. But thank you, China Bank Chief Economist, Domini Velasquez.
Thank you.
We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. The Asian Development Bank is allocating $10 billion in climate finance for the Philippines starting next year until 2029. In a statement, ADB said the funds would allow the Philippines to implement its commitments to climate action under the Paris Agreement. The multilateral lender is preparing the Philippines Country Partnership Strategy for 2024 to 2029, where it is expected to prioritize climate action and promote inclusive growth. The Philippines is considered one of the countries that is most vulnerable to climate change, as seen with recent extreme weather events and rising sea levels. On corporate news and still on energy, ASEAN Corporation announces plans to use carbon finance to retire a coal power plant and replace it with renewable energy. ASEAN announces a new collaboration with the Coal to Clean Credit Initiative, which is supported by the Rockefeller Foundation. Through the project, the South Luzon Terminal Energy Corporation plan would become the world's first coal-fired power plant to leverage carbon credits to enable its decommissioning. The initiative could reduce around 15 to 25 years worth of emissions, given that coal plants typically operate for up to 50 years. PLDT Chair Manny V. Pangilinan takes over again as CEO of the telco giant effective January 1, 2024. This comes as PLDT announces that its CEO Al Panlilio will retire on December 31. The company says Panlilio, who has been PLDT's president and CEO since 2021, is stepping down due to health reasons. Panlilio, though, will remain on the PLDT board. Pangilinan, meanwhile, will hold the position until such time that a new president and chief executive officer is appointed. And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News. All sides, all the time.